Today we're talking about the biggest mistakes first-time buyers make in California. These mistakes I see all the time, and trust me, they can cost you thousands of dollars or even cause you to miss out on your dream home. But here's the good news. If you know what you are looking for, you can avoid them. I'll walk you through each one step by step, share real examples, and give you simple ways to do it right. Stick with me until the end. I'll share a bonus tip that most buyers don't even think about, but it could save you tons of money. Here's what I mean. The average price for a home in California right now is $800,000. And if you're looking in places like the Bay Area, San Jose, and parts of Orange County, that number can easily be well into the millions of dollars. All right, now let's look at an example with an $800,000 home. If you put 20% down, that's $160,000 up front. Your loan amount would be $640,000. At today's interest rate, somewhere around 6.75, your monthly payment is going to be around $5,200 to $5,400 a month. But let's say you don't have 20% saved and you go with a smaller down payment, let's say 3% down. That's about $24,000 up front. Your loan amount would be $776,000. Now your monthly payment jumps to about $5,800 to $6,000 a month. You also will have something called mortgage insurance. And here's where a lot of buyers get tripped up. They hear someone say, oh, my mortgage payment is only $3,800 a month. But that's not the full story. Your monthly payment is made up of several parts: principal and interest, the actual loan payment, property taxes. In California, that is usually about 1.25% of the purchase price. So on an $800,000 home, that's $10,000 a year or $850 a month. There's homeowners insurance, that's around $150 a month, depending on the home. Mortgage insurance, if you put less than 20% down, that could be $200 to $400 a month. And sometimes there's HOA dues. If you're buying a condo or a townhome, these can range from $200 to $600 a month or even more in condominiums. When you add all this up, the real monthly payment is usually much higher than what people expect. So here's the fix. Get fully pre-approved before you start looking at homes. Pre-approval means your lender looks at your income, your debts, your credit, and your savings to give you real numbers. This way you'll know exactly what to budget before you start shopping, and you won't fall in love with a home that's out of reach. Think of pre-approval as a financial roadmap. It gives you clarity, it gives seller confidence in your offer, and it saves you from a lot of stress later on. Another mistake is forgetting about extra costs of owning a home. Here are a few examples. Property taxes, around 1.25% of the home price on an $800,000 home. That's $10,000 a year or $850 a month. There are closing costs. These are usually 2 to 3% of the home price. On an $800,000 home, that could be between $16,000 and $24,000 due at closing. Homeowners insurance, again, around $150 per month. Repairs and maintenance, roof leaks, appliances, landscaping, it all adds up. But here's the fix. Budget for the extras. Don't just plan for your mortgage payment. Know the full monthly cost so there are no surprises. A huge mistake first-time buyers make is waiting for the so-called perfect market. Here's what I hear all the time. Maybe I'll wait until interest rates drop. Maybe prices will come down over the next year. Maybe if I wait 6 months, I'll get a better deal. But here's the truth. There's no perfect market. There never has been. Let me give you an example. A client of mine in 2022 decided to wait because they thought home prices might fall. At the time, interest rates were around 4.5%. Now, let's fast forward just 1 year. Prices didn't fall in their area and interest rates jumped over 6%. That same home ended up costing them hundreds more per month, even though they waited hoping to save. The problem is this: while you're waiting, a lot can happen. Home prices might climb higher, interest rates could go up, and your dream home you've been eyeing, someone could buy while you're still waiting on the sideline. My advice: buy when it makes sense for you. That means you've got a steady income, you've got some savings for a down payment and closing costs, you plan to stay in the home at least 5 years, and most importantly, the monthly payment fits your budget. That's your perfect time, not when the media says it's perfect, not when your cousin says to wait. And here's something to remember. Interest rates aren't permanent. If they go down later on, you can always refinance to a lower payment. But what you can't do is go back in time and grab the house you loved after somebody else bought it. So stop chasing the perfect market. It doesn't exist. Focus instead on the perfect fit for your life and your budget. Another big mistake I see first-time buyers make is not working with local experts. Here's what happens. Buyers go online, find a random lender from a big national website or an agent from another city. Sounds fine at first, right? But then things start to go wrong. Why? Because real estate isn't the same everywhere. California is tricky. Every city has different property taxes, school districts, neighborhood rules, and even loan programs that are more common in some areas than others. If your team doesn't know the local market inside and out, you can easily overpay, miss out on homes, or even lose the deal. So my point here is build the right team. That means working with a local mortgage broker like me who knows California loan options. Also work with a local real estate agent who knows the area you are looking in. They know which neighborhoods are moving fast, which homes are fairly priced, and how to structure an offer that wins. And when needed, a trusted home inspector who knows and understands the area and can spot issues you might miss. Think of it this way, buying your first home is like playing on a sports team. You can't win by yourself. You need a coach, teammates, and a game plan. When you work with the right local experts, you can avoid costly mistakes, save time, and have a much better shot at getting the home you want. So please don't go at it alone and don't settle for someone who doesn't know your market. Your team matters more than you think. Here's another big mistake I see all too often. Buyers skipping or rushing through the home inspection. Yes, inspections cost money. They could be $500 to $600, but they can save you thousands. A good inspector might uncover roof damage, plumbing problems, or electrical issues. Always get an inspection. Use it to your advantage for negotiating repairs or decide if the home is still worth it. That's one of the smartest investments you can make. Here's a bonus tip. Flexibility often beats the highest offer. In competitive California markets, sellers love buyers who can work with their timeline. Maybe you offer a quick closing, fewer contingencies, or let the seller rent back the home for a month. Sometimes being flexible can help you win even when your offer isn't the biggest one. So let's recap the biggest mistake first-time buyers make in California. Not knowing the real cost, forgetting about extra expenses, waiting for the perfect market, not working with local experts, skipping the home inspection. And remember, the bonus tip, flexibility, can make your offer stand out. If you want to avoid these mistakes and buy with confidence, let's talk. Call or text, click the link below for a 15-minute free strategy session with my team. We will walk you through your numbers, explain your loan options, and help build a plan that gets you in your first home. If this video helped, please give it a thumbs up, subscribe, and hit that bell so you don't miss future tips, and drop a comment with your biggest home buying questions. Thanks so much for watching, and I'll see you in the next video.